I can find that are like 72, 73 grand. So we're kind of holding tight and trying to just figure out where things are headed. I do have a couple.
Oh, did we lose Art?
Yeah, all of a sudden he went silent.
Yeah.
It's like
So-
somebody replaced him, like somebody joined and he got booted
Yeah, I
off.
see Jose joined and then all of a sudden he went blank. I'm not sure. I think he may be in the, he may not be in the office doing it, so I'm not sure.
I wonder if he didn't click the wrong thing on the whether or not he
Right.
accidentally clicked leave meeting when the
Oh, he
meeting
may
report
have.
popped up.
I'll keep an eye out for him.
But at any rate, I don't know if anyone had listened to the news this morning, and I'm tired of saying this, but apparently a third of the COVID wastewater testing sites across the United States have seen a recent spike in a new variant of the Omicron that has been hitting Europe. And I guess over 50% of the new cases in Europe of this new Omicron variant. We have a variant of a variant, so I don't understand that, but or this new variant, I guess they've seen a spike at a third of the testing locations, wastewater testing locations across the United States, according to the CDC. So not exactly news I want to hear, but I mean, I don't know if anyone else had heard that, but that was what was going on this morning.
Yeah, so to keep us moving in the direction Art was going in, as soon as he comes back, we'll pull him back in.
But I'm just saying that plays into the whole inflation, with
Absolutely.
with people being sick, limited workforce in order to get jobs done. That's the only reason why I was saying it, is that it's gonna put a strain on the labor market, which is gonna drive labor prices up and therefore inflation.
Absolutely.
So
Well, no, and I think it's a good point. I did hear it just vaguely on the news when I was driving in. And, it seems like this time around, though, that we'd have somewhat of a playbook, but exactly what you said, Tim, is if you have any events on the books, if you've got some groups on the books or conventions on the books, very well, you could lose them just as quickly as they were booked. And so going around is, what does your cash flow look like? Can your cash flow suffice? If you've got a great April that's happening right now, and then all of a sudden you happen to lose 50% of it just like that. And now we know that that is extremely possible. So always keeping that in the back of your mind is your cash flow. And what if I lose 50 to 75% of my bookings because of a variant or anything that's facing our industry right now? And I think that's totally different than how our industry has operated in the past. We were always very tight, not tight with our cash, but we're always very loose with our cash, and and we always spent as we went along. And I don't think that's the case anymore, is that we definitely have to have cash on hand and always have to have in the back of your mind, if I lost 50, 75% of my bookings, what will that look like? What are my next moves, so that you can make decisions rather quickly and not wait 2 weeks, because 2 weeks could cost you dearly.
yeah. Yeah, and it's about, it's one of those things. I think very few of us, I mean, on a personal level, personal finance wise, it's something like 70% of households, if they had $1,000 unexpected expenditure come up, they could not pay for it. They would have to rely on credit cards or something like that to pay for it. They do not have access to cash.
There's actually a number about
Join
that,
the meeting.
that if the household earned an extra $1,000 a month, they would actually stop almost 35% of all bankruptcies.
Yeah.
Right.
It's ridiculous.
I mean, in our businesses, I hate to say it, we've run so loose on cash, and what comes in, we can't seem to hold on to it. But really, we do need to work on, looking at what our expenses are for a 6-month period of time, and putting that money into a savings account that we do not touch unless something like this happens.
Mm-hmm.
I mean, I think we'd see a whole different landscape right now, on who is still in the industry and what our situation is, if we as an industry had a 6-month fund for no bookings, for no earnings. And I mean, that's talking, look at all your loan payments that you have every month, and look at what your insurance payments are, and what your payroll expense is, and take that, each month, multiply it by 6 and put it in a savings account, and don't touch it. It's not there as an investment. It is there to have access to in the event that an emergency like this pops up. And I don't think people people have done that. I mean, we personally, people don't do it.
And so with that being said, you know, while we're waiting for Art, that was the main focus for this meeting was to, and I know for our company that we're making decisions rather quickly, and most of it is focused on cash flow. You know, what do we need to do differently for cash flow? How do we operate like the rest of the travel industry, not our industry? Our industry seems to be very archaic in how it operates. So, you know, how is it that hotels and airlines and rental cars and restaurants, how are they operating in order to improve their cash flow, and how can we mimic some of those steps? So if anyone wants to take the lead on that,
Yep.
like what changes that you've made in just the last 4 to 8 weeks in order to improve cash flow, knowing that inflation is at an all-time high and gas prices are at an all-time high.
Hey, Tracy, does that mean you're going to do dynamic pricing? Because when you mentioned hotel industry, that's kind of what I was thinking.
Yeah, and I'm glad to see we've got Randy Allen on here. So I personally have been dabbling in studying the dynamic pricing and what that really means. And I think the phrase itself scares a lot of operators. However, all of us do it in some form or fashion. We all do it. So, you know,
Yeah.
when there's a Super Bowl, all of a sudden, you know, we have 12-hour minimums, we have 3-day minimums for big events. That's dynamic pricing. A lot of us charge the late fee and the early morning fee. That's dynamic pricing. A lot of us charge, you know, deposits up front. That's a form of dynamic pricing. You know, and when we have huge events at McCormick Place or just huge events that are happening in Chicago, all of a sudden, you know, you've got your 3 to 6 hour minimums. Proms, you know, you do your 6-hour minimums. That's dynamic pricing. And I think looking more into that, if we can learn as an industry and listen to what our technology platforms have available for us and push them to teach us what they have, because each one of them have something, but our industry has balked against it and they've kind of let it go. But talk to your technology platforms and ask them, what do they have for revenue management and inventory management? I know Fast Track has inventory management, and it actually manages your inventory based on what you have left. If you know 2 weeks from now, you only have 2 limousines left, you can do dynamic pricing on that. And why shouldn't you? And what business or service or product do you purchase today where they give you a rate sheet for the next 12 months? We are the only industry that, oh, can you send us your rate sheet? And we hand over a rate sheet. Yep, these are my rates for the next 12 months. There is no other industry that does that. So I think we kind of just have to get out of our own way and start looking at it. And it's not that you do it across the board all of a sudden, but just take bits and pieces, maybe events, maybe certain vehicles. It's much easier to do it with, you know, your specialty vehicles, your limousines, your buses, and then go from there and then expand into your black car services.
But one thing with the black car services that I want to emphasize is that every other industry that provides a service, if you need something right now, you pay the most. If you need business cards printed tomorrow, you're going to pay a rush fee. If you need something delivered overnight via UPS, you pay an insane rate with UPS or FedEx to get that overnight. And for whatever reason, our industry seems to not want to charge that premium for those last minute trips, which, you know, we have an additional expense of rerouting cars and rerouting and redispatching trips that I don't think people really understand in their mind. And really, I think the first time that I heard an ASAP fee being charged was actually, oh gosh, it's probably been 7, 8, 9 years ago in Miami Beach at one of the summits, where Mike Campbell, I believe, with Race Limo up in New Hampshire, said anything within 4 hours, we charge an additional $50 for.
And I don't want to get too much into dynamic. I want to make sure that we're able to cover cash flow as of today because of the rising costs that we're being faced with right now. But Tim,
Yeah.
you're absolutely right. When all of a sudden an ASAP, I think here in Chicago, we're known for the ASAP reservations and being able to take care of them within 30, 60 minutes. And with that being said, there's a lot of work that happens in the background to make that ASAP available, including staging vehicles. So I know several of you stage vehicles, whether it's at the airport or on the streets of Chicago, just waiting for that ASAP work. But there's an expense to that.
It
So
costs
when
money.
something does, right, so when
It
something
it
does
costs
come
money
in
to
last
affect your
minute.
cash flow, make sure you're charging for it. That's
Mhm.
ultimately what I'm saying.
I see Art is back on. Art, just to catch you up, we are just talking a little bit about our focus is going to be for cash flow because of the rising cost.
Mhm.
We went into dynamic pricing a little bit. So I'd like to circle back to cash flow and what everyone's been doing the last 4 to 8 weeks, just trying to keep up with the expenses that you're being faced with, and what changes have you made, not to make more profit, but to keep up with the expenses so that you're not going negative. Is there anybody that wants to take the lead on that?
I can
Anything?
speak for us. What we've been, I've been monitoring my P&Ls and looking at comparing my gas costs to how much revenue we're bringing in with our gas surcharge. I mean, I created that sliding scale that's like, you know, it this much, it's this percent, and I wasn't sure if it was going to be accurate or not. I mean, based on our current cost, we should be at 12%, but based on the dollars, we're running at 10%. So at a 10% fuel surcharge, we're covering the increased operating fuel cost. I don't know how anybody else is doing it, but
What price do you use as your baseline?
I'm
yeah,
curious.
split up.
I'm curious to know if other operators are monitoring the percentage of each expense. Like, what is your labor costing you? What is your building costing you? I ran my P&L every month and broke down to the percentages of labor, percentages of fuel, percentage of insurance. And I think it's really important when you're looking at cash management to know what your percentages are and to be able to look and see where you're losing money. And I know that this is an odd situation that I experienced, but we had a category for buying beverages for our car, bottled water and sodas that we would put in the car. And all of a sudden, I watched that number jump, and I don't remember the actual numbers, but let's just say it jumped from 3% to about 6% over the course of 2 months with no particular increase in revenue or anything that would cause an increase in buying product. And I realized at that moment that I had a theft problem and that somebody was stealing cases and cases of bottled water from me. And I think if you don't break down into percentages and monitor those percentages, you really don't know where you are. And as Tim alluded to at the beginning of this conversation, right now, it's so important to be putting cash away for a rainy day. And you don't know how much cash you have to put away for a rainy day unless you're monitoring what your expenses are. So I just wanted to see if anybody else broke it down to that level.
No, I've done that, and not so much the water, because we stopped putting water in the vehicles during the pandemic and we haven't started up again. But just there's things that are out of your control, labor costs. Our shuttles that would typically pay out, you know, $18 to $20 an hour are now paying out $25 to $30 an hour. And either we maintain that price level or we don't have drivers. We just basically shut down. I mean, there's so many options for drivers right now. The cost to keep them has gone up drastically, at least to keep good ones.
And that's a question that I have for those of us that are here. You know, with inflation, has anyone increased their pay to their staff in order to help them cover those rising costs of food and utilities, and you know, even the gas that they use in their personal vehicles to get to and from the office? I mean, you know, these are all real expenses, and you know, and I'm someone who it is easier to assess the fuel surcharge than constantly increase and lower rates. And it's easier for the customer to understand because they see the price at the pump. They get it.
Yeah.
But it doesn't affect what the gratuity, if it's a percentage gratuity, it doesn't affect the percentage gratuity. So it's not something that is being passed on to the chauffeur and stuff like that. So I mean, are people raising their rates as well? Are they paying their chauffeurs more or staff more in general? What are people doing to help their staff counter these inflationary prices?
So we're in a metropolitan area. So if you're in like Chicago, the minimum wage is already at 15 an hour. So your starting point is from there. But when I talk to some of our members, most have raised their pay, whether they're using contract work or W-2, because they can't compete with all of the companies and hospitality and everybody else that's trying to also hire at some pretty high price. So I think from what I've been hearing from people, it's a matter of competing. Like to Art's point, I mean, there is a garbage truck company down the road who's paying $40 to start an hour for CDL drivers.
Yeah.
Without any experience. So that does kind of puts the landscape at a challenge.
But for someone who was making $25 a year ago, okay, $25 an hour a year ago, we just came out and I think they said that the inflation rate over the last year was about 7.9% or something like that.
Yeah,
8%, which means
we're close
that
to
in order to keep up with inflation, now that $25 an hour employee, we should now be paying them $27 an hour. That's 8%.
Yeah.
So I mean,
Were we in lockdown a year ago?
I'm sorry, what, Mark?
I apologize. I was just thinking, weren't we like locked down a year ago?
Yes.
You really almost have to go back 2 years.
I think you're, yeah.
It depends. It depends on your market and where you are. I mean, some areas of the country, other areas weren't. I mean, we have operators from all over the country here, and even with Richard, internationally. So this is not just a an urban area sort of situation. I mean, things are different in Springfield than they are in Chicago.
Right.
So I mean,
and I think what companies that have staff in the office and as well as chauffeurs that they're paying as employees is when you have these new hires, you're hiring them at a higher rate, but you have to be so careful because all of a sudden they come in at a higher rate. Well, now immediately you have to give a raise to all of your current staff because they've been with you and they pulled you through COVID. So just like that, you don't have new employees at a higher rate. All of a sudden, you have to manage the rate and the pay of all the employees that have been with you. And that's absolutely huge.
Higher rate and lower work ethic.
Unfortunately.
Sad to say, but you may be right on that. I see Jim has his hand up.
Is
Yes, Jim.
anybody on the call by show of hands offering a sign-on bonus to your drivers, to new people? Okay, so I'm not getting a lot of-
it's payable depending on certain benchmarks. They get
Right.
spread out.
Harry at Echo Limousine in San Jose is doing $5,000 sign-on bonuses, but the total amount is paid out in chunks. So like when you get to a certain benchmark, you get a $1,500 pay. I think that from the get-go, you get $1,000 in the $5,000 sign-on bonus. But I mean, I started in this business in 1990, guys, and I never, ever would have envisioned that you'd have to pay somebody a bonus to come to work for you. It's just insane. But as somebody else mentioned, the opportunity for drivers right now is so immense. There's so many places they can go. And I think that they realize that we're fighting over them. So it's really a driver's market right now, where when I got into business, it was very easy for me to tell somebody, you don't like my policies, there's the door, head out.
Well, they're also for the bus drivers, it's even more so from what I'm seeing. I mean, we've lost one driver already to Old Dominion. They're going to pay for his CDL training.
So,
to onboard them on top
Harry-
of the pay.
Harry got a contract at the beginning of last school year to run 6 private Sprinter vans Monday through Friday to take kids to school, to a private school. And I'm going to tell you, I was full-time with him at that time. And 3 days before school started, we were still looking for drivers. And it was pretty terrifying to get a contract like that, to run 6 vehicles a day, 5 days a week, and you can't find a butt to put in the seat to drive it. Unbelievable.
Yeah.
Our bonuses are actually going to employees who refer
Yeah.
someone that we hire.
Okay.
Because that's
Good
one of the best ways to find employees is through referrals.
And who is speaking?
Randy,
Oh, there you are, Randy. I only saw the top of your head. Thank you.
We're doing the same thing that Randy just said, is we have internal referral bonuses.
Just keep in mind that those that are driving motor coaches with a Class B, there are plenty of Class B jobs out there. Plenty of Class B. You can drive a garbage truck around here with a Class B license and make
Absolutely.
$100,000 a year. You're home every night, every weekend. I mean, that's what we're competing against.
You know,
Do we need to go? Do we need to go back to the fuel surcharge? Does anybody have questions on that? Art had talked about that he's doing the tiered. So he's got a tiered program. So as the price of fuel continues to climb, then automatically his fuel surcharge, I'm assuming, is going up with that price of fuel. Does anybody else have any questions regarding how to put it on, what's best, if it's a flat rate, a percentage? How do you know what percentage to put on? Is there any further discussion on that?
I know one of the debates right now is what about trips you've already booked? Do you increase it at the time of the trip to the current rate you're charging, even though you've booked it at a certain amount?
yeah.
Don't know what the right answer is, but that's an issue.
I was talking to Tracy about something similar last night. Glad you brought it up, Randy, because we have weddings booked already. And we were going to go to 5%, but we just calibrated and realized that's not going to be enough. So we'll probably go to 7%. But we contacted all the weddings on the books, coupled so far, and told them that there is a fuel surcharge and we're not getting any pushback. The only question we received was, will you adjust it down if the price of gas goes down? And we said, absolutely. But right now, it would have to go down below 350. Or I think we said 350. So, but I think for regular transfers and things to, of that nature, we're not going back retroactively. And I know a couple of the board members I've talked to also are not doing that, but prospectively, they've been adding it.
My problem is people, I think, are getting a little greedy with that too, where they're charging more for the fuel surcharge. So my thing is, if you're going to charge a fuel surcharge, make it equal to whatever your base is going to be. So you said 350 a gallon, right? You're going to go everything over 350 a gallon. Let's say it goes up, at least make it equal to what you're losing for that $1.50 or whatever it is in losses.
Yeah.
People are going higher than that, are really almost covering the full amount of the fuel for the whole cost of the ride. Does that make any
You've
sense?
seen that. Yeah,
Yeah.
it's completely.
And I'm just not sure that that's the most ethical thing to do.
Well, it's not, yes,
But-
Mark has his hand up. Yes, Mark.
I was gonna say, I don't do a line item fuel surcharge. And I just tell people with gas prices, we had to raise prices. Everything's going up. The cost of shipping goods,
And I agree with you,
Just-
Mark. I do the same thing, but a lot
I-
of others don't,
Yeah.
actually. They
But
do
then
it.
I guess-
eventually those prices get rolled in. My customers genuinely appreciate it. They say that absolutely you're right. And so far, we've had no objections. Things are going to get ugly probably in the next couple of months. They may have a different opinion.
I guess when I hear that, this is what I think. When you add it to the rate, and there's no right or wrong answer here, but when you add it to the rate, it seems to me it's more permanent, because are you going to lower your rates when the gas price goes down? And
Is it
Yeah.
is it a bad thing that it's more permanent? Look at how many of us in the past have waited 4 years, 5 years, 6 years for a rate adjustment. If this forces us to do rate adjustments quarterly, how is that a bad thing?
Is a box of cereal going to go down at the store? I don't think so.
No, well,
Cost
you
of
You're
know,
buying
product
boxes
is
of
going to
cereal.
go
I'm
up.
buying bags. They're cheaper.
And I just wanted to, going back to what Jim and Mark had said about, the all-in rate or a flat rate versus having a line item. A lot of companies, the line item is necessary because depending on how you pay your chauffeurs, if you pay them a commission of the base or if they're employees versus IOs, in the background, that's how the system decides who gets the gas. So it
Yes.
has
True.
to be a separate line item,
Which
whether
is why
that
we're
flows to the
doing it.
chauffeur or whether the company is keeping it, because that's how the system determines it. Now, how you sell it to the customer, that's different. You can still sell to the customer. If somebody calls today, yes, your all-in rate is $117. That includes everything. So
And
you
I'm
can
sure
decide
that
how to sell it.
And I'm sure that in some areas of the country, they collect sales tax or have to collect sales tax. I don't know how a fuel surcharge necessarily plays into that sales tax collection or not.
I've seen affiliate pricing in the last week that still included a COVID surcharge.
Oh, Lord. Guess they're a little bit behind there, huh?
Well, but at the same time, are they still sanitizing and doing all of the disinfectant that they were doing a year or 2 years ago? Is that the reason? And will that always be a charge because they continue to disinfect? I don't know.
That's a good question. Well, I guess to Tracy's point, I mean, you all have to have to decide how to break that fuel down. And normally, I mean, in 13 years, we've never had a separate line item for much. But this time, because we just raised our rates in February, we decided that it was probably better to show the fuel surcharge and explain to the customer that we would be looking at it every few weeks and we will adjust when we can. We're preparing a communication to them as well to explain what's going on. But normally I'm in the group where I like to show one price, all in price, and don't get into all this. And this is really the first time in 13 years that we're actually breaking out the fuel. And like I said, we're really not getting much objection. Just the question about, are you going to lower it if it, once it goes down?
And
Thank
I
you.
think oh, go ahead, Randy.
I think consumers at this point are totally desensitized.
Yeah.
The price increases in general. It doesn't
Yeah.
seem to be any pushback at all.
Yeah, which is an interesting point because many operators that we've talked to the last few weeks, not just in our membership, but in other states, have said they're afraid to put any more charges on the bill. They're afraid to raise or add a fuel surcharge. And I'm surprised that there are still people that are afraid. I don't think you can afford to be afraid because if you look at your bottom line, if you aren't profitable in a few months, where are you going to make up for all this? Because the cost of fuel has gone up. The cost of supplies has gone up. I did an oil change on our SUV 2 weeks ago, and it was $100. 2 months ago, it was $75. So, we go and get estimates for repairs. 1 week we get one rate. A week later, they say, oh my God, we went to order the parts and they've gone up 15%. This is,
and that's something real quick. You just mentioned something right there. When we give out a quote, I think we need to let people know that this quote is good for the next 72 hours. You need to
absolutely
book it within the next 72 hours or within the next 5 days. At that point, we're going to have to re-quote it because things change.
I want to hold that thought, Tim. And I want to go back to that thought before we move off of the fuel.
Good.
We just did in our office. If you look at the background of the fuel right now, we were just talking about the customer facing effects of the fuel surcharge, but in the background, so we analyzed our 14 and our 23 passengers that we had allowed to go home with the chauffeurs after their trip. So they do trips in the morning, they take the bus home midday and then come back out. So a lot of them were school trips, employee shuttles. They would go home, come back out for their evening shuttle, take the bus home for the night. And there were several of those buses. By the time we analyzed it this past week, and those buses that were going home, they were putting on anywhere from additional 80 to 120 miles going home versus coming back to base. Once you figured that out with their miles per gallon and the cost of gas,
20 gallons. That's
just
20
for our
gallons.
14 and 23 passengers, it was costing us $13,000 a month
Oh,
for those
Lord.
vehicles to go home. So you guys can even
Are
do
you,
that on the
are you
black car
factoring
side.
in? Did you factor in their pay? Because once they go, when they go home with the vehicle, they're off the clock when they end the job and they go home.
Right.
When they bring the vehicle back to your place, they're on the clock till they drop the vehicle off, they gas it up, drop it off, whatever, and till they actually leave your facility.
No,
I
we didn't
look
even
at
go
that
into
too,
that.
and-
This was strictly just looking at the fuel, like what is it costing us to allow them to take the vehicle home so that it's a convenience to the chauffeur, midday versus coming back to base. And so just the fuel part of it, just because of the rising cost. And we just checked 2 vehicle types and that's what it was costing. So those of you that allow your black cars to go home, how many more miles is it putting on those vehicles for wear and tear? And to analyze that and what is it costing you to allow them to go home? Because there's definitely a cost if they live further than your base. So just something to take a look at in your operations.
I look at it 2 ways. We've started to let drivers take vehicles home, which we never did before. We're completely employee based, so we do punch in, punch out, plus overtime after 40. We don't pay by commission, it's straight up hourly plus gratuity. So in my particular case, they have that driver come to the garage and drop the car off. I'm paying him till he gets back to the facility, does his post trip on the vehicle, documents it, and then leaves. If they take the vehicle home, we're actually paying them from the time they drop the client off. And it seems as though it's another benefit. I mean, we're looking at ways to treat our drivers better and letting them take the vehicle home. They see that as a positive gesture by the company. We do other things like Amazon cards and gift cards and thank you cards, and keep on reinforcing that company that wants them there. And it seems to be working. We've lost people and we'll continue to lose people here and there. But I believe that the gesture of letting them know they're appreciated in some cases does as much or more than, the bonus type thing. I don't know. But I think, Tracy, in your case, you guys got to look at what it's going to cost you in drivers to make them come back to the garage, drop the car off, go home, and then come back later, get the car to go to the job. Plus the possibility of them being late. I mean, what they've been doing is they've been taking the car home or taking the vehicle home and then leaving to go do their 3-4 o'clock pickup. At this point, they might have left their house at 2:15 to make the 3 o'clock pickup. Now they've got to leave their house at 1:15 to get to the garage, to pick up the vehicle, to get to that same 3 o'clock flight or 3 o'clock pickup. And if you're not paying them more to do it, good chance you're going to lose them.
All
'Cause there's
valid
a
points
lot
for
of people
sure.
looking for drivers.
Yeah.
Valid points. So going back to, I think it was Tim that had said about when you're sending out quotes and putting a time frame on it. So yes, this quote is good for the next 72 hours. This quote is good for the next 14 days. For us, that is something that we are currently working on implementing because we've never done that in the past. If we gave a quote out 6 months from now, they might come the month before and like, okay, we're ready to book, and we just honor that rate. However, so now you think about it, if you're quoting out a large group 6 months from now, do any of us know what the price of fuel is going to be or labor is going to be? And if we didn't put a time frame on that quote, are you going to end up eating it when they go to book 5 months from now? I think the first one I heard doing that here in the Chicagoland area was Oppie, and I see Oppie is on here. If you wanted to say anything about that, but we're trying to implement that the same way as for large groups, is given a 14-day policy. This proposal is good for 14 days.
There was a comment from Randy Allen earlier that he does 48 hours on his. quotes.
Randall Wilms.
Oh, was that Randall Williams? Okay,
Yeah.
sorry.
Yep.
Wrong one. But that's pretty interesting and probably, very aggressive.
But it goes back to the dynamic pricing thing again. If you're busier on that day, now we're raising our rates, on that day.
Mhm.
If by the time they book, you're down to one vehicle, well, you should be able to charge a premium for that vehicle. So,
And I'm wondering, Randall Williams, have you noticed that it gives the urgency to book? So instead of them waiting until the last minute when they know they only have 48 hours, have you seen that they book quicker than they normally would?
Honestly, no, I haven't seen that, but I did need to put it in, because I wanted to create that feeling of urgency. But I honestly, I don't think it helps that much. It's kind of small. Maybe I need to make it bold or a bigger font and text, perhaps. But
Are you using the add-ons thing to do that?
no, it's
Okay.
regular limo anywhere.
Yeah.
It's just, yeah, it's in my thing.
Yeah, I think that you need to have to handle that, you do need to send out emails to people that haven't booked that say, hey, this quote expires in 6 hours. To create that urgency. I mean, there's more,
I'm working on add-ons as we speak, so it's coming.
Okay, let's not turn this into the add-ons meeting.
No, it was more of a, is there some sort of follow-up to create that urgency? Because putting one line somewhere there, nobody's going to read that one line. But if you
Agreed.
are sending a follow-up that says, hey, this, or make it bigger, that this quote is only good until this time, and then do some automation or something like that, 6 hours ahead of time. Hey, you haven't booked this trip yet. This quote expires in 6 hours. We're going to have to re-quote it after that. There's a single line does not create urgency. That follow-up is really, in my mind, is what creates the urgency.
I agree 100%, but it also gives me the chance to say, hey, you waited 3 days, it's $10 more, it's $20 more.
Yeah,
right.
We created a quoting tool that standardizes all the quotes, standardizes the text for the quote based on the type of job it is, so that they'll get one quote for a wedding, another quote for a group movement, another type of quote for a corporate event. And that does, the reservationist sends out the quote. And then what it does is 72 hours later, it keeps prompting them. I'm not sure what the prompts that I have set are, but it'll keep prompting them. And you'll find that when they get an email from the system stating, you have this quote open, you haven't booked yet, is there anything we can do? And it kind of follows through. And as that happens, you'll get people responding saying, I'm not ready yet, I'm doing this or that, or I booked somewhere else. But it kind of does move that process along. So you're not, because what typically happens is you send out these quotes and then they get lost. And I mean, if it's one person or it's a real small company, maybe it's easy to follow through with them. But I've got 8 people sending out quotes, and we're sending out anywhere from, I don't know, 10 to 20 quotes a day. So it's beneficial to have something that follows through.
At the same time, are you following up and at least getting, the response of, we've booked somewhere else, we found somewhere else cheaper? You're getting feedback from the client as to why they didn't book with you, which is beneficial.
They can respond in the quote why they didn't book. They found another someone for less money. They changed their dates. There's like canned messages that they could just click a link and send back and say why they haven't booked.
Gathering that information, because I don't care who you are in this industry, we're not gathering enough data on our clients. Okay.
And it allows us,
but it
allows us to track the quotes, because now you've got all these quotes and they come into a point where you've got a list of quotes by date along with phone numbers and contacts. You can follow through and try and get the work if you haven't gotten it. I'm sorry, go on.
No, I'm just saying by getting that data as far as why people are not booking with you, or that creates that allows you to market differently, if you will. That information is better.
How are you?
For the point of argument on this conversation, just for the record, I monitor that. And at this point, I'm really not seeing people not booking with us because of rate, which is something pre-pandemic I would see.
I understand.
How are you marking that quote as booked so it turns off all those follow-up funnel processes to the reservation?
Well, when they book it, they mark it as booked. So whatever reservationist gets that booking, they always refer back to the quote. The data from the quote gets transferred into the reservation. So it kind of flows into the reservation. And we just mark it as booked. And if they don't call, like if there's a trip that, if there's a quote that nobody called on, nothing happened, when I pull up my quoting tool, I see that it's marked that it's system archived. And if it's system archived, that means that the date went past and it automatically archived, rather than somebody from my office contacting them. Somebody contacting them to, how would I say it? To see if they're booking or what they're doing. And there's a lot of times we make calls and somebody's booked with somebody else. And, you know, we tell them we'd really like to service them. And they say, you know, we really like what you had to offer. But geez, you know, we found it for less money. And sometimes it's a big job and they found it for like $100 less. You know, it's $1,000 job and we're quiet that day and they've got someone else booked for $100 less. We actually get them to cancel where they're at and book with us. And our quotes automatically send out and certificates of insurance and things that the customers should be looking for before they book with a service provider.
What platform are you using?
We had it made,
So
Nice.
custom made program.
if everyone's okay, I'd like to pull us back into the fuel discussion just a little bit, because I know there's a few people that are here specifically for that conversation. It'd be interesting to hear how people are going to track the fuel adjustments and what do they have in store for maintaining the surcharge. For example, I know one company is going to be looking at the AAA price information online, and every couple of weeks or every week, and then they'll make a decision that way. Be interested to hear what others are thinking about or have put in place. And are you doing it by the mile or by simply the trip? I know.
I want to share, Oppie had just sent me a message. He's not able to talk. He's driving right now,
Okay,
but he says we do actual mileage calculation along with actual toll calls. We know the fuel mileage per vehicle and look at the average fuel cost and update our calculator weekly.
mhm.
So his fuel changes on a weekly basis.
What are other people doing? Thank you for that, Appy.
So far, I've only done it on like a worst case analysis. The most expense that fuel can add to a trip is if you're traveling on the highway for the entire hour at highway speeds, that's consuming the most gas in that hour. So it's kind of the worst case scenario. So using your miles per gallon, how far you travel in that hour, it's pretty easy to calculate. If gas is up $1 per gallon over your baseline, how much did that gas cost you extra for that hour? Pretty simple math.
Yeah, because originally I was looking at a flat rate, and then to your point, Randy, I started to realize that a flat rate would probably work for our local city trips. But once I started crossing state lines, like going to Indiana and Wisconsin every day like we do, that threw that equation right out the window. So we're back to looking at the average miles and the the cost per gallon and the mile per gallon of the vehicle gets as well. Because you're right, it does vary depending on the type of work you're doing. And
But interesting, one of the largest affiliate networks in the industry has so far implemented only a flat rate per trip for sedans and SUVs. Doesn't make any sense at all.
I had a really hard time. I thought I had it nailed by doing that, because we came up with something, and then as I started talking to one of our board members, I realized that since I go to Indiana probably 2 or 3 times a day, that completely knocked out my whole theory. So, but what are the rest of you doing? Are you?
I started doing some research before I did this. Or I added a fuel charge and started looking at companies that were charging us a fuel charge and calling them, asking them how they got to their fuel charge. The same thing we're doing on this call.
Sure.
You'd be surprised how many people got to their fuel charge by just charging an amount that other people were charging them. So XYZ charges them, 8%. So they put an 8% fuel charge in.
Gosh.
I couldn't do it that way. So what I did is I looked at what our fuel cost was, or what fuel's gone up in the Chicago market. It's gone up about 30%. And I look for my fuel surcharge to be 30% of my fuel expense. And as long as it's falling within that range, I'm not overcharging anyone. I think I'm being fair with it. And we
we have
were
a-
looking at it monthly. We're gonna need to look at it like weekly.
Yeah, we have
Well-
a comment here from Jim Miller. He said we changed from once a month to twice a month. So similar to what you just said, Art. We monitor with Gas Buddy the cost at several areas. Also, we have a separate line item on the fare increase based on increases of fuel. We use a chart to determine the increase.
Yeah,
So
we're
Gas Buddy,
using that
that's a good
federal site.
resource.
Using what?
The federal site, it's the, I don't know what it's called. I've got it on our rate sheet.
Oh.
It's federal
And
gas
it-
price, goes Chicago's average, which is well below what we're actually paying
Yeah.
at the pump.
It's like listening to the news and them saying our average is 4.27 when we're driving down the street and it's already over $5. Yeah.
Oh,
You
good
know,
God,
you
it's
talk about
329 down the
markets.
street for me.
Excuse me?
329 at my station.
Well, I'm not
Yeah,
gonna
bless
drive
you.
all the way to Kansas for gas, sorry.
Well,
Send a
we
ticker.
went out over the weekend, I went to Milwaukee. We went to a brewery in Milwaukee, and when I got to Milwaukee, fuel costs were actually like $1 less a gallon,
I've heard the same thing, yeah.
you know?
We good on fuel?
I think so.
Not
I
now-
wanted
now-
to, go ahead.
No, I was gonna say, I have a question now. How are people gonna react to, interest rate increases? Because that's coming.
It already is here.
Yeah, well, I mean,
You mean for like car loans? vehicle
yeah,
loans
car
and
loans,
stuff?
yeah, with the Fed meeting this week and saying that, they're gonna start increasing interest rates, which obviously is gonna change how much we're paying, car notes. I mean, we've got vehicles that are going up in price, and we have interest rates that are going up, and yeah, all this is gonna affect how much we're paying per month on a loan.
Interest rate surcharge.
Yeah. Oh, let's not give them any ideas, Randy, please.
The cost
think
of doing
there's a lot
business
more
is
fallout.
increasing.
There's a lot more fallout that's gonna take place. All of these companies that can't get their employees to come back to work, people that are looking for jobs right now aren't looking for jobs where they're coming into the office. I mean, we were trying to bring our people in part-time last week. Nobody wants to come to work. Yeah, I want to work from home, and that's what it is. So you've got all these office buildings downtown in Chicago that are currently,
Empty.
70% vacant because everybody's working from home. And the fact of the matter is, I don't know that these employers are going to be able to get their employees back into the office.
The whole thing to
It's
me
going
is
to be
like,
another thing that's going to affect the economy all over.
I don't know, to me, it's like cyclical, because 15, 20 years ago, when I was in technology, it was poo-pooed upon to have remote workers. Then suddenly there was a burst for talent, and they would move to remote workers. Then now it went back in the 90s and 2000s to, I want everybody in the office. I want people here. And now that, like you say, people are allowing folks to work from home. Some of our largest companies in the area, like Discover, those people are not back in the office. It's optional still. And there's going to be a glut of real estate too. It's not just about what do I do about getting the people back, but I've actually heard some operators say, I've got a big office space with nobody in it and I'm heating it. So rent, heat, light, all your basics are still being paid every month on that property, but you have
throw a
people
World
working
War.
from home.
Throw a world war on top of that. I mean, there's just a lot
Yeah.
of shit gonna hit the fan.
We had a employee shuttle that they had their grand opening yesterday. They tried to have it in November to bring all of their employees back. So November, as we know, that didn't happen. So they had their reopening yesterday, and they expected over 400 employees to be on that employee shuttle throughout the 3 hours, and it was less than 80. So
Yeah.
even though they were demanding everybody to come back to work, like it's just not happening.
Well, they can all find other jobs for more money.
We've had, in my last company, they actually had people that left the state because it was cheaper because they were allowed to work from home. They actually relocated. They still work for Chicago companies, but they're living in Florida, Arizona, Colorado, etc. And
Right.
that's a huge change for a traditional company. Like the last one I was at was 90 years in the business, and these people they're everywhere, but they still are employed. So, I mean, you're still, when you deal with that, you're dealing with Illinois taxes and everything else. Nothing changes. It's just where they actually live.
Anybody
Everything's
else
going up.
concerned that, anybody else concerned that productivity and quality of work is not as good from work at home?
No, but I think
So-
it changes the way you manage people. You have to do it differently.
So, some of you know, I also do insurance, and one of the large insurance providers, when they sent all their employees, their servicing agents home to work remotely, they discovered that approximately half of them were incapable of working at home without direct supervision being there to make sure that they were doing their job. So they let go of about 40 to 50% of their workforce. And now all the work that those people were doing were being shifted upon the people that could do their job without direct supervision. So it is a real problem that people working from home cannot necessarily be as productive. Now, for those that, you know, in certain industries, marketing, where you need to collaborate, you get ideas. I mean, there's a real genuine benefit to having that water cooler talk and discussing with other people just on the fly in the office that you are not going to get at home.
We use a product called Active Track. And the way that we're set up is our servers are cloud servers, and the employees log in as like an instance. I forget what the term is, but because they're logging onto our servers, I can monitor what they're doing. And after Active Track, I would go in when I set up Active Track, and it would monitor how much time they're on the computer on their shift. It would monitor, it takes a picture of where they are every minute. It allows me to go in and set up and say, okay, you know what, Facebook is not a productive site, but Google Maps is a productive site. So I can say productive site, unproductive sites, their time on, and I can pull up by employee, by the week, by the month, by the year, by the day, how much time they've spent on productive sites, unproductive sites, how much time that computer was just idle. And between that and our phones, the phones ring at their house. If they don't answer the phone, the phone system logs that they didn't answer the phone. The phone rang to them and they never picked up the phone. So if you have the right tools in place, you can monitor it. And in my particular case, my employees are actually working longer and harder from home. Go ahead, Mark. You're on mute.
I've been really successful paying a scheduler by the job. She gets paid for every ride she books. Her job's to fill rides. She can do it any time of the day or night. As long as she gets it done, I'm good. It's been working nicely so far.
You know, and I know for a fact that like the night shift, and there's some times when, you know what, they're probably ducking out and doing a load of clothes or, you know, cleaning a window. I don't care. I mean, it's kind of like, you know, I've kept all my people from pre-pandemic. I didn't have to train new people. I'm able to monitor what they're doing. And if they are slacking off a little, I can get on them and bring them back in line. It's fine.
Are they using their own equipment at home or something you supplied?
My equipment, my phone, my computer, they're using their internet. I'm not paying them for their internet. But when we went into this thing, we kind of raised their pay and made an agreement that they were going to cover it. I mean,
So
my people at home that when they were in the office pre-pandemic that were $18, $20 an hour are now like $25 an hour.
So there's no privacy concerns because you supply the equipment they're using.
No, you're right. Even the office phone is my phone.
Yeah.
Could we go back to cash flow and talk about the pros and cons of when we collect our revenue? So currently, I believe we are all collecting at the time of service. What are the pros and cons of collecting at the time of booking? or taking more deposits than we have in the past, maybe taking a 50% deposit when a large group is coming in, maybe a month before the large group, another 25% with the balance due when the first trip happens. So what are your thoughts of accepting payment at time of booking and taking deposits sooner?
The only thing
In
that-
our case, we don't. And when we went into the first pandemic, we were doing some of that. I had a wedding planner that was doing it. In some cases, she was getting paid completely for the wedding and, you know, big deposits down. And when everything changed and I had to give the money back, I kind of looked at it. It was killing me to give the money back, but we did it anyways. But I also looked at how many cancellations we had. You know, how many people booked a wedding and canceled it 2 days before? It really wasn't happening. At this point, we don't. We secure it with a credit card, and 72 hours before, our system automatically gets an approval on that card, and we just move forward. When it's done, we hit the card. We're not having any issues with it. But that's just for like weddings. We're not doing proms, Friday, Saturday night. We're strictly corporate, C-level executives, and for the weekends, we utilize our equipment for weddings.
So
But we're not taking anything. And part of the reason, as I said, is it killed me to give it all back. But it was the right thing to do, but it killed me to do it.
Alright.
And there's a lot of companies that couldn't do it. They took so much money in advance that now it's time to give the money back. And evidently they didn't budget and didn't put that money on the side, and suddenly they're screwed. They
we
can't
had
give it back. They don't have it.
that happened a lot because people,
Right.
I was amazed at how many people told me they couldn't afford to make the refunds. And
Well, I mean-
I was always taught you put it in retained earnings or you hold it somewhere.
Right,
Um,
because it's not earned yet, so it is on your,
Exactly.
it is on your liability until the time of service, and now it's earned
Absolutely.
income and it moves over to income. So you do have to be careful in your accounting practices. So to that question,
a
Avi
good-
had responded that he does hold on, he does a 30%. Hold on, lost it. There it is. 30% non-refundable at the time of booking, and I'm gonna go back to the non-refundable.
Yeah.
Remaining balance is due 14 days before the service. We are a bus company, so not sure how this will work for car service. Going back to the non-refundable, so in addition to analyzing the pros and cons of accepting money at the time of booking, is I'm starting to see a lot more non-refundable. So just in the past week, I've pulled the 3 different affiliates that it clearly says in their terms and conditions, a non-refundable deposit is due, or deposit is non-refundable. So I'm starting to see that a lot more. I personally don't quite understand, because if they cancel within your cancellation terms, is it still non-refundable? I'm not sure, but pay attention to all of your affiliates. I'm starting to see it a lot more, the non-refundable deposits.
I would,
Um,
I was sharing
then
with
you see the-
Tracy last night to say that there's also someone, and I have to dive into it a little more, who will take a deposit, say it's 25% or whatever, but if they cancel within the proper window, they will not return the entire deposit. They will keep a $200 quote fee or service fee. I don't even know what we call it, but it's one of the few people I know that's actually doing that. So in other words, they're still allowing some flexibility for cancellations within their window, but they're taking a fee. It's another way to deal with it.
Jim Miller responded with quite a few responses for everything that we've been talking about. If there's anybody that cannot see the chat, let me know and I'll go ahead and read it, but there's quite a few on there that,
It's not coming up as private. It's probably
no,
coming
it's
to
to
you as
everyone.
Does it say to everyone? Because I'm not seeing it.
Yes.
Oh, here it
Yeah,
is.
it's going to
Yes.
everyone.
Okay.
But there's some good ideas on there, a lot of what we've been talking about as far as incentives and gift cards. And so if anybody can't see it, then just let me know and I'll send you a message.
And you know what? I will, when we publish the recording, I will include a chat file. So for those of you who may or may not have seen it, you can see, because there's been some very good comments in here. So I'll also include a chat file for you, so you can go back and refer to the comments.
So his number 5 goes back, and we had talked about this, was how the price may vary. So taking future bookings, how do you know 6 months from now what your price of fuel will be? So his number 5 says, going back to fuel, our customers know through the confirmations that fuel is subject to change. So that would allow, having that statement within your confirmations, that would allow you to 5 months from now be able to go back to those reservations and put a modest increase on if you need to at that time. If we find out that fuel's at $7 a gallon and it was booked months ago, that I think that's a good line item to have on your confirmations.
Yeah, all of our confirmations say that price is based on availability and subject to change. And that's kind of what we're hanging our
Yep,
hat
that
on.
covers it. Yep.
I may be going against the grain, but at some point when your policies become more rigid and non-customer friendly, I think we're getting away as chauffeur transportation. Motor coach might be a little different, but with chauffeur transportation, we're getting, I think, further away from being a luxury service because your policies are part of the service you're offering.
I agree, but I think that times have changed. I mean, we have a job that we've been working on for about a month and a half. That's happening at the end of this month, and it's going to turn out to be about a $50,000 job. And we basically told them last week that prices are going to change. Fuel cost has gone up. This has gone up, and they were very understanding. They came back and said, we understand. We know where it's at. We completely understand. And that's really what it is. I mean, I can't see doing this stuff and not being profitable. If you're not, and it's important to be able to look at your P&Ls daily if you can. I mean, we're on livery code. So when we cost out a ride, it automatically goes into QuickBooks. So at any point in time, I can pull up and see, what we spent on fuel, what we spent on farms, what we spent, whatever our outlay is, however far they've gotten billing, and generally it's within the last 24 hours, I can pull up a P&L and see exactly where we're at. And I think that's another thing that's important for everybody on this call going forward, is being able to pull up your numbers and analyze your numbers in an efficient way, because in many cases, I don't know if Lumo Anywhere dumps anything into accounting, but when we cost out a job and its job is subcontracted to a company in another city or any other company, when we cost that job, it bills the customer and creates the payable for that farm. And if it's our driver, when we cost it, it bills the customer and creates the payable for the driver. So that at any point in time, we've got accurate numbers. And I can't tell you how valuable that is right now.
And going
Jim's
back
got
to
his
what
hand
Art's,
up. Jim, you got a funny looking hand there, buddy.
You're
Go ahead,
talking
Jim.
about mine?
Yeah, you got your hand up.
That's probably because I'm left-handed.
Oh, there
Anyway,
you go.
won't go down that road.
That's
But
right.
in talking about being rigid, by the way, first of all, I appreciate all the discussion, a lot of good ideas here, and I appreciate the input of everybody. The one thing I would say, I'm not sure who mentioned the comment about rigid. When there's a difference between being rigid to me and just letting customers know what the guidelines are. And we all know, we all make exceptions. So you have somebody we have a no-show policy, for example, 2 hours before. So somebody has a no-show, our policy says 2 hours before. You have somebody with 500 trips that cancels. Well, you go look at the trips and you make your exception. So that to me is where customer service comes in, where you have to clearly state to customers what your guidelines are, because nothing worse than somebody saying, but you didn't tell me. So you have to tell the people what's expected, but then the customer service side is now you have to take the time to deal with individual issues as they come along. And I think that's where customer service comes into play.
it actually gives you an opportunity to provide customer service and that they weren't expecting it.
Right, exactly.
Art had mentioned going back to a group at the end of this month and to let them know that the prices may increase.
Join the meeting.
The last 18 months, we have literally gone out to every single agreement, every contract that we've had, and renegotiated every single one of them.
Hmm.
And there was not one single customer that said, no, we have a contract, we're sticking to it. They all understood it. And we definitely went in and changed, and we added, a fuel tiered chart. Changed our cancellations, but had to raise the rates on some of them. So even though they still had a year or 2 years left in them, we still went back and renegotiated, and they understood that. I just want to, I do have to run for another meeting at 11:15. So I just want to thank everyone, and it's been great to see everyone and see everyone from so many different states as well. But if anyone has any questions, you have my email, you have my text, and, but thank you, everyone.
Thank you, Tracy.
I
Thank
think
you,
we're coming,
Trace.
I think we're coming to the
Thank
end
you.
at this point,
Appreciate it.
unless anyone has any other questions. I really appreciate everybody showing up today. I know we haven't met for a while. We're gonna try to go back to monthly meetings. So if you have any topics or burning issues that you'd like us to cover, please don't hesitate to reach out to me. Most of you have my number. I'm probably in somebody's hotline somewhere, but I think, yes, you're welcome. I'd really like to hear from you guys. We've come up with a couple of things we think will be helpful, but sometimes just hearing what other people are doing is just enough to spur some ideas. So I hope that was helpful for everybody.
I think it might be interesting to do something like this in another month.
Mhm.
I think there's a ton of stuff happening that's going to change our world. And it's going to happen relatively soon.
Like a follow-up,
So I
you
think-
mean?
Yeah, I think there's going to be there's a lot that's happening right now.
Yeah.
I'm like a news junkie, and there's just so much shit going on around the world that it's gonna be. I think we're gonna be challenged in some ways.
I agree.
Yeah.
Buckle down.
I think that I don't know if that this call is going to solve it. Maybe maybe another call a month from now would be like going to an AA, what is it, AAA meeting or something.
Bill O would be so proud.
You
Yeah.
know, I've never been to one, but I imagine it'd be
Oh,
like that.
Lord.
So I don't know. I mean, but I think that just hearing from other people and hearing what other people are doing and how they're coping with it sometimes in itself can be helpful. And some of these ideas you might feel they're good, they might feel they're bad. I mean, there's a couple things on here that I saw in the chat that, I'm going to look at instituting that, would make us a better company. So there's always something to learn. I'd like to say, I've been in this for like 44 years, and I'd like to think that I don't really like to think that I know more, but I've been around a while, and I have my opinions, and I'm staunch on my opinions. But I get on calls like this, and it kind of changes my mind and lets me see things from another viewpoint, which for me is beneficial. Thank you.
All right, so the next meeting is going to be in April. So I hope you all can attend, and if there's anything else, I think we'll adjourn.
Do we have a topic yet?
Not yet. Well, actually, we have a couple we're working on, so if we could probably make a follow-up on this one, part of that agenda. I made a note.
Thank you.
Depending on
Paula.
where
Thank
things
you
are
very
at, I
much.
mean, maybe a
Organized, yeah.
full one for this.
It could
I
be,
mean, we're going into summer. Potato salad recipe sounds like a good topic.
that could work.
And wine in a pool.
Okay,
Okay,
thank you.
thanks,
Bye-bye,
everybody.
everyone.
Thank
Have a
you.
great day. Thank you
care.
again.
All
for
right, take
joining
care.
us. Bye-bye.
Bye.
Bye.
Bye.